Welcome to Trading Lounge and the US tech stocks. I want to do a little bit of a different video today. I just want to have a look at the bigger picture for the tech stocks. So that means we'll just be looking at the daily charts and we'll just be looking at some of those these possible corrective patterns. But just before we do that, I just want to run through some of the indices here too, because obviously they are like a moving average really of what's going on in those stocks. And I also want to have a look at this particular market here as well, because I'm in Australia, so emerging markets and commodities are quite important to us over here. Well, in Australia is pretty much a commodity country really. So so sometimes, I can reverse things a little bit. So, because what happens in Australia is normally a reflection of what's happening overseas as well. So, in this particular market here, this tracks about 3,000 stocks in many emerging markets, and we can clearly see here in this particular pattern here is that we have 5 waves up here, 1, 2, 3, 4, 5 here. So an A wave, a B wave, and then 1, 2, 3, 4, 5. So that is a corrective pattern of a larger corrective pattern. So with the US markets, for instance, there are stocks that have taken out the top here, such as Apple. There's also Berkshire Hathaway that's taken out the top here. The banks are in a bit of a weak situation. There's many other stocks that have moved up from the low in various degrees to take out the top here and not take out the top, anywhere between the top and the bottom here. And most of them can be counted in 3 waves. There's some like Apple that you could count up as in 5 waves, and NVIDIA you could certainly count up in 5 waves as well. But I think this pattern here sort of really reflects what's going on in the world. So that means there's a couple of things that could occur here. One of them is that we have definitely got a larger A wave here and a larger B wave here. So we could come down in 5 waves, or we could come down in 3 waves. There's an A and a B and a C wave here for a triangle pattern. So when I come over to the S&P here, for example, we've had this as a triangle pattern here last week as well. So we've got this as an A, B, C, and an A and a B and a C wave up here, and then 5 waves down here for the A wave here, and then the B wave here, and then the C, and D and E over here for this. So a larger corrective pattern for all of this here. So yeah, it could play out like that, or it's going to play out like this here. But this seems to be the more dominant pattern here, this flat correction, a 3-3-5 structure here. And we can see that with the Dow Jones as well. So just on the Dow Jones here, we can look at this here as the A wave here, an A and a B and a C for the B wave here, and then 5 waves down here. Now the NASDAQ doesn't have a very nice 5 waves down here. The wave 4 overlaps there. So we could count it a little bit differently as well. We could force it into this particular pattern, and or we could look at it as 1 and 2 and 1 and 2 in a bigger picture as well. So yeah, so that's kind of it. And we can look at other markets as well. This is just the S&P on the slightly iShares one here, where we could also view this as an A and a B and a C definitely taking out the top here. So in this case, we could still have the triangle here. We could also, there's 3 flat corrections. This could be a running flat correction. They're a bit rare, but it's possible. So it could be a expanded flat, a running flat, or one of the two actually. So we'll see how that goes. We do have a nice 5 waves, coming down here, and most of this leg here in the NASDAQ and the S&P and so on, there is a little 5 waves in here there's probably a little bit more momentum to the low on this particular move here. We'll have a look at that on the S&P or the NASDAQ. We'll probably use the NASDAQ in this case because we're looking at tech stocks. So yeah, this is Vanguard's here as well. This is the total world stock market here. So, you know, we've got this first leg down here is the A, and then we've got a pretty clear A, B, C correction here for wave B, and also a nice 5 waves emerging down here. So we're definitely going to have either an A and a B and a C down here, or 1 and 2 and 3, 4, 5. So what we need to do is we really need to prepare for this particular move down here. We've got plenty of time because this 5 waves and the 5th wave here needs to land in 5 waves, and then we need to get a correction here. The correction could be a little bit tricky because it may pull back to the 61.8%, or it may fall very short at, you know, 40%. It kind of just depends on the sentiment of what's going on, so we'll keep a very close eye on that. But what I'm thinking about with all of this is that we'd really want to catch this 3rd wave down here. So that's really our sort of aim at this point. So yeah, that's about it for these. So when we come to the tech stocks, so this is Apple here, and you know, Apple has taken out its previous top here, as other markets have done. Berkshire Hathaway's done it, but Berkshire Hathaway's moved up into taking its top out here, is left it in 3 waves. It's pretty clear that it's in 3 waves. But this one here, we could view this as 1 and 2 in here, and 3 and 4 and 5. I won't go into a lot of detail here, but it counts quite nicely for 3 here and 4 and 5. So it's possible to look at this is a wave 1 up here. That's possible, but it doesn't really suit the rest of the markets. That's the problem with it, you know, and most of the markets will be pulled around by one another. They're herd animals, really. We are sort of herd animals to a point, I guess. That's probably more the truth. So now this move down here doesn't count very nicely as 5 waves like the other markets do the indices. But we could force it into 5 waves, or we could count it slightly different, and we could do all those sort of things with it. But the truth is that this little 5 wave structure that's coming down through here, that's going to be the same as the NASDAQ and the S&P. And we know that in the majority of cases, we can count 5 waves down. So it's likely we're going to have some sort of ABC correction that's going to be a little bit higher. It's possible we could look at this as 1 and 2 in a smaller scale here. So I'll be aware of that as well for this. But I do think that it still needs to finish with a bit more downside to come here first. So yeah, I mean, this is on an intraday basis. They kind of mostly move the same. I mean, you can have excessive things where, you know, there's certain, you know, financial or news events and certain things like that. But generally speaking, they all sort of shuffle along together on an intraday basis. And yeah, so if we look at Apple here, and it just, the NASDAQ rather, sorry, I said I'd look at that before we go too deep. So it just depends how you want to count this wave 2 up here. This, because the SP500 had this as the wave 2 up here, had a higher move than this one here. So down the bottom here, it is possible to go long above this top here, but in the meantime, because it just depends on how you want to count that, in the meantime it'll be 3, 4, 5 coming down here to finish off. So we're very close to finishing off down here. Okay, so they're the 2 options for the NASDAQ, and that would come in with Apple as well coming into this space. Okay, once again, you could count 5 waves up there and go along from that point there as well. So, but I wouldn't just do that. I would really wait for the 170, and we're kind of more interested in shorting it. But we'll see how we go with the situation. So, yeah, even though this is not 5 waves down, we can move it into that particular position, okay, in terms of this rally here. Amazon's had its earnings, and so the same thing here in the bigger picture as well, though we'll talk about this in a moment. But as it stands at the moment, I can squeeze 5 waves into this, but it counts much better as an A and a B and a C wave up here. So that means that the whole move down here, some stocks have taken out the top here, Amazon hasn't, So we know that this leg is corrective, so we know that we're in a big correction, that's it. And, the other thing too is that, just coming over to the yields here, and I'll just look at this on the weekly basis, because I think they all tie in together quite sort of nicely, with the bonds basically bottoming. So with the 10-year yields here, we've got 1, 2, 3, 4, 5 up here, and we're close up here. But I was sort of thinking March next year, February, March, for a bit of a top here, and the yields and the bonds would have the top in them as well, and then the Feds would get what they want, and they'll be back down at the 50-60% here, but between 2 and 3%, but because we've got 5 waves here, we'll be looking at another 5 waves to the upside. How far it goes up, I don't know. I mean, sometimes they could be short, long, same, whatever. And do we get another 5 waves up, or is this just an A and a B and a C wave here? So this will be inflation driving this, and the Fed's rates and the yields are basically bonded together by inflation, and inflation can come in different ways. Through war, it's just pretty much on the table, isn't it? So those sorts of things. But this topping here, and pulling down, and the bonds pulling down as well. The bonds have still got further to go down. So the time they all get down together, it should create quite a good environment, really. If we're going to be, coming down here first in that case, So yeah, food for thought. And this little move here, if we line this up with the S&P, and as I just mentioned with the NASDAQ there, we've got a good chance of coming down here first, and then we'll be going up here, in this ABC pattern. So that means that this one here could be a little move to the upside, coming back here, and then having 3 waves up here for this, and then coming down. At this point, it'll be like that, because this is 5 waves here, this is a B wave here, and so far, because that moves up here because of its earnings, it hasn't really left a nice 5 waves down here. You could probably squeeze it out, but all the same, like on an intraday basis, it's going to move with the rest of the markets now that it's had its reporting, and so we could look at this as moving further up here for this. So we will expect a pullback from here, in line with the NASDAQ and so on, and then a push up from that point. And NVIDIA is a little bit different, because NVIDIA, as I mentioned before, this move back through here has pulled back 78.6%. So it's rather big for a wave 4 to pull back 78 point, it's even more than that, really. So basically 80% it pulled back. So in this case, this is where Apple could come into play as well. We could just have a larger ABC pattern coming down here for this, pulling back. This one pulled back 80%, so this one could be pulled around with the rest of the world as well in that case. At the same time, though, on an intraday basis, and we'll look at all these tomorrow, but I just wanted to spend a bit of time on the bigger picture here today, because it's becoming, a little bit more sort of solid in what's going on. So in this case here, we can expect a little bit further down and then a rally. So we'll be looking for the short trade after that. That's where we'll be at with this market. But yeah, in this case, we can count 5 waves up, and it's pretty good. It's in a bit of a world of its own at the moment with this, So that's that, and Meta's also in a bit of a world of its own as well, in terms of it's got 5 waves up off its low here, but it doesn't stop it from pulling back quite deep as well in all of this. So once again, we'll see a little bit more downside here before the upside. So we'll be looking for a short in this space. And Netflix here it can be viewed in, I think this counts quite nicely down here as 5 waves actually. This move up through here can be counted in 3 waves or 5 waves, both reasonably comfortable. As a 5 wave move, we can go 1 and 2 here, and then 1, 2, 3, 4, 5 for the 3rd wave, 4th wave, and 5th wave. That works okay. Otherwise, we'll have to look at the 3rd wave here, the A wave, the B wave here, and the C wave here for this. But it will follow the rest of the markets. You know, there's nothing exciting going on with this particular company in terms of, you know, how it performs. Yeah, sure, they're stopping the logins occurring, duplicating logins for different folks, so that will force people to get their own. Secondly, they are putting up the price a little bit. So, you know, that's a high risk thing as inflation, you know, rates are going to be higher for longer. So, you know, I don't see, there's nothing, you know, it's certainly not a NVIDIA or anything like that at this stage. Yeah, I think this dog's had its day, unless it pulls a rabbit out of the hat. You know, I never could see it competing with YouTube, you know, that's the thing. So, free content against paying content, you know, costly content. So yeah, this here can be counted as 5 waves down here. So we're looking for an A wave, a B wave, and a C wave here. We'll still stay with that, and that will be in line with the NASDAQ and the other markets moving up as well. So a bit more of a pull down, and then we'll see a move to the upside. So yeah, we'll just see how that goes, but this will be a nice short trade over here for this. And, you know, even if, let's just say that, you know, that we're totally wrong and this particular move up here becomes 5 waves up here, well, then this will be the A, the B, and the C wave over here, and then it'll go up from that point. And if it was going to go up from that point here, this move coming down here will be on much more of an angle like this. You know, not like that, but more of an angle than wave A here. But if it's the 3rd wave, it's going to come down deeper and faster. You know, it's going to show that there. So we'll know what it is by the personality of the structure. And then we come over to Google. And once again, I can force 5 waves into this move to the upside here, but it counts much better as 3 waves. So an A wave here, a B wave here, and then 1 and 2. And you can see 5 little waves here for 1 and 2, and then 1 and 2, 3, 4, 5. Nice 3rd wave in here. Nice 3rd of the 3rd in here, the 4th wave. 1, 2, 3, 4, 5 for the 3rd, 4th, and bigger 3rd, 4th, and 5th here. So it really leaves with an A and a B and a C wave. Now, you know, it could come down to the 38.2% retracement level here. If I took this here as wave 1, it's on the 38.2 at the moment, and I know that it's going to find, you know, a little bit of support. It's going to find support here, and it could be a wave 4, but it'll be more like we'll be looking for this. But technically, you know, if you wanted to argue about this, yes, it could be 1 and 2 here, and 3 up here where the C wave is, 4 here, and then have another move coming down here for that, you know, as wave 5. So it's possible, but it's just not lining up with the majority of the global markets at that point, you know. So we'll keep an eye on it, but it will be this one that we're looking for, and the other Google that folks trade is exactly the same count as well. And to me, this is a really nice count. I mean, it counts very clearly, you know. I don't think there's, you know, I mean, yeah, so that's that. And Microsoft. So Microsoft is kind of, I don't know, it's kind of a little bit like NVIDIA in its own little way. You know, I mean, it's pretty impressive the way they've incorporated AI into all of their products so quickly. So, you know, it's holding up pretty nice, and they're in that particular race and all the rest of it. But it's got the same count as Google going to the upside. Yeah, we could look at it as wave 4 here. That's highly possible, and 1, 2, 3, 4, 5 moving up. So we'll just see how this plays out, and I would imagine this moving up higher. So this would be wave 1 here, wave 2 coming back, 3, 4, and 5 coming up here. Now, it could be the top at that point. It could end up being, in this instance here, it could end up being a 1 and a 2 up here. You know, that's possible at that point. So then it'll have a little ABC at that point. So we'll see if it takes out the top here. But because it's one of the strongest, it means that we shouldn't really be shorting it. That's the thing, you know. So we'll see how that sort of plays out. That's you know, there's a couple of possibilities here, because while the NASDAQ and that are going up for their ABCs here, this will also go up in 3 waves as well, a little bit like Amazon actually. Yeah, and Tesla here as well. So with Tesla here, we have to look at the bigger picture. So we know that this move here is corrective. So we know that the whole pattern is corrective. We can squeeze 5 waves to that point there, but it doesn't really have the right look and feel about it. So it looks better as an ABC pattern. So we'll just play it out like this. And it's got a slightly different move down here than the other markets. So that means that you can see here that we have this move. I mean, first of all, this could be an A and a B and a C wave here. But because that, I mean, it looks like 5 waves here, but when I have a look at it, like on an intraday basis, I can get a reasonably nice B wave out of it. So anyway, we'll see. But this little move here is 1, 2, and 3, and 4, and 5. So we can expect at least one more low here. I won't put that in play here just yet. So we can expect at least one more low here in line with the rest of the markets. And I'll just keep a bit of an eye on this. This could do something a little bit different. So I'll just be a bit wary of it. But I certainly don't want to short the little low that comes in here. I'll need some sort of retest at that point, and then we'll look at it. Okay, so we should see another, you know, we should see a decent move up here at some point, unless it's going to give us some sort of sideways pattern with all of this. Because when we think about, when we go back to these markets here, just all these indices here, they've all really got a nice, that's 5 waves in here. So 1 and 2 and 3 and 4 and 5. We could look at them as 1 and 2 and 1 and 2, and then, you know, 1 and 2 and go down that way. And I'll be aware of that situation as well. But what I'm saying is that in most cases, we'll be looking for some reasonable, once this lands here, we'll be looking for some reasonable strength to come into the market here. And this will be part of our sort of setup over here. So we'll just keep bringing them all together. We can't do any, you know, you can go short today. That's not a problem. But the bigger picture is really getting this wave 2 in here. It doesn't matter which market that we look at. Really, they're all going to be doing much the same here. So in this case here, we can look at this as, you know, 1, 2, 3, 4, 5. Hasn't broken any rules here, but it could be 1 and 2 and 1 and 2 and 1 and 2. It could be that, you know. So I will be aware of that, but we're looking for some type of rally. Now, it may be small, it may be large, but it will leave the low exposed, you know. So as a thing, it will leave that low as a you know, exposed, and we can always short it from that point. And then our job is really to improve that the best we can. We can move it up to the second move, you know, this type of thing, into the B wave here and this type of thing. And if the C wave here is really lazy like this, and we can count 5 waves up, well, then we can short it at the top. Otherwise, if we're a little bit unsure about it, we have to wait for the first impulse wave to come down and then look at wave 2, and then to build in the first part position, and then just keep building in positions coming down through here. I mean, we won't be trading the Dow, but you know, the other markets that we look at. So, and the SP, you know, the S&P will be the same as well here. There is overlap on this one with the S&P, but I'm normally okay with that around large numbers, to be quite frank about it, because I know that large numbers attract larger orders, or the majority of orders rather, and keeps pulling the market to that large number, because it's just the way that people think, you know. People think in certain ways, and that's what occurs. But, you know, no matter what happens with all of this, we'll either get this wave, this is the triangle pattern one here, but this one here, you know, we'll either get a nice ABC in this pattern here, coming back up, you know, to a reasonable move up here. This is what we'll track, because it's got to correct this 5-wave structure here. But if this is 1 and 2 and 1 and 2, 2 here and 1 and 2, then it's only going to come back up to 50-60% of that last move there and then go down. So we'll be able to use the 4200 as the short trade at that point, and we'll see where stocks are at the same time. So we need to bring them all in together at that stage. Alrighty, so yeah, look, anyway, I just really wanted to have a look at all of these and the indices in the bigger picture. It's not like we're missing much. We know that we need to be likelihood of coming down here a little bit further for the next few sessions. It just depends on how you want to count this. But with the NASDAQ here, just to confirm this a bit, any move above the top here at this particular point would tell us that the low is in place, and we could move this over here, be it wave A or be it wave 1 in the triangle pattern. Okay, so I'll leave it at that. Thanks for tuning in. Cheers.